Hey everybody, Russell Gray, co-host of the Real Estate Guys radio show, back again with my good friend Dana Samuelson from American Gold Exchange. Hey Dana.
Hi Russ.
We are powering through the various modules of our series, everything you've always wanted to know about silver, but didn't even know to ask. And I wanted to do this series, especially with Dana, because I started out after 2008 wandering in the wilderness of wondering what happened, and led me to studying bond markets, which quickly led me to studying currency, because the two are very much intertwined. And then that led me into really wanting to pay attention to the precious metals, not so much as an investment, but more as an indicator about where bonds and interest rates and currencies were all heading. But as I went through that process, I realized, hey, there's some pretty powerful strategies. And so we'll get to those in a little bit. But right now, there's a lot of talk about gold, and we want to put a little bit more emphasis on silver, because silver is a very interesting commodity, a very interesting monetary metal, and one that there's some real opportunity in if you understand it. So this segment, we're going to talk about silver's split personality. And so, Dana, what I've learned as I've studied this is that silver acts as a monetary metal, meaning in the Constitution it was listed along with gold as one of the two metals that would be used for money and currency for conducting business, a medium of exchange and a store of wealth. But it's also an industrial metal. And I think a lot of people don't understand that. Can you talk a little bit about that?
Well, silver has been money, currency, for most of our lifetimes, going back generations and generations until the 60s when we took the silver out of the currency. So it is a monetary metal. It's been used as currency. What's been happening in the current market is the fear bid is more in gold than in silver right now, because it's so much easier to transport real value in gold than silver. The same dollar amount of silver is 100 times as big physically as the same amount of gold. So that is holding silver back a little bit right now, because gold is catching the fear bid. It's just more compact and easy to transport for value. Silver's also, as you said, an industrial metal. So when we go into an economic shock like we're in right now, and commodity use is going to drop, silver is going to get a tug of war on its price, because demand will be less for industry, but there will be more demand for it as a monetary unit. So that's part of this split personality that you mentioned.
Yeah, silver is used, the way I understand it, in photoelectric cells, in electronics of all different types, in various types of industry. And one of the things that's interesting about silver is, because of its low price, it isn't worth recycling. So a lot of the silver ends up getting used up. We're going to talk about that when we talk about the differences in above ground stock between gold and silver. But the point is to understand is that there's windows of opportunities when it's kind of like Dr. Jekyll and Mr. Hyde, and not that one is evil or better than the other, but in this case, you just have to understand that when silver is acting as a monetary metal and the dollar, or whatever currency you're denominating the metal in, is weakening, meaning it takes more dollars. Okay, the inverse of that is the price is going up. We think, oh, the price is going up. That, in real estate, we go, oh, that 3-bedroom, 2-bath house, it was $50,000, now $100,000. It went up in price. Well, it didn't really go up in value in any way. It still sleeps 3 people. It didn't change at all. What happened is it takes twice as many dollars to buy the same house. That's called inflation. That's called loss of purchasing power. And if you own the house, it's great for you. If you're on the outside looking in, it's bad for you. Well, the same is true with precious metals. It's one of the reasons we use them as a hedge against collapsing currencies. And so that's why it's called a monetary metal. So when it's in demand for that reason, the price goes up. But to your point, sometimes those dollars, those currencies that are seeking shelter, and I want to get out of my currency and I want to get into metal, they favor gold for the reasons you discussed, and they leave silver in the dust. And we've had a little bit about that. And again, we're going to get into more details on this in a moment with respect to the gold-silver ratio. But in fact, maybe we'll just bunch all these three together because they kind of all fit. So when silver gets left in the dust like that, what they call the gold silver ratio reflects it. Instead of it taking maybe 60 ounces of silver to buy 1 ounce of gold, it might take 70 or 80, or recently with the economic collapse and the COVID-19 crisis, when the economy shut down, it shot all the way up to 125.
Right, right. That's an incredible spike that's corrected back down now. But if we chart this, and if you go back 25 years, the gold to silver ratio has on average been between 60 and 80 to 1 since 1995. Anything over 80 means gold is expensive relative to silver. Anything under 60 means silver is more valuable relative to gold. And
okay, you're the expert, but I'm going to challenge you on one thing. All right, and you can feel free to correct me, because you're the man and I'm just the boy in this conversation. But I don't look at it as gold was expensive. I looked at it as silver was cheap.
Right, that's true. That's true. So that is exactly the way to look at it. When the ratio is over 80 to 1, silver is much cheaper relative to gold, and it's a better value for the longer purchase or longer hold period. The ratio did pop as high as 125 to 1 on a knee jerk in March, which was highly irregular. It didn't last very long, but it was a great value buying opportunity when silver was $12 an ounce. It's $18.50 today. Today, the ratio is about 96, 97 to 1. And so silver is lagging by 15 to 20% relative to gold, which creates a huge opportunity for silver buyers.
Yeah, and that's really the point that we're trying to make here. So part of that, I believe, has to do with the decrease in industrial demand. And because you can't recycle it effectively, then you've got to, mine new, and we're going to cover that in a moment. But for right now, I just wanted to make sure people understood that silver has a split personality. It has a role as a monetary metal, and when people are concerned about the collapsing value of currencies, like when governments are printing too much, and as we're recording this in July of 2020, I was going to say, forgot what year it was, but we're recording this in July of 2020. Obviously, the Federal Reserve is printing trillions and trillions and trillions of dollars to try to prop up the financial markets in the wake of the economic slowdown that was driven by the COVID-19 shutdown. And so people who are paying attention to this, and that's why we're doing this series at this particular time, and we'll see how long this thing remains valid, but people who are paying attention are like, hey, I've got excess dollars, or in a real estate investor's case, I've got excess equity, and I can tap that equity for really, really low long-term interest rates, and I can convert it into precious metals where I can really have a more secure balance sheet. And that's a more advanced strategy, and we'll talk about that later. It's kind of a tease. But the point is it's something that I think investors of all types, but especially real estate investors, need to be paying attention to. But when you see that gold-silver ratio shift, then that tells you that, like when I saw it go to 125, I had to ask myself a question. Is gold overvalued, or is silver cheap? If I think gold is overvalued, then I may decide just to stand pat. I'm not going to jump into silver just because it's cheap, because it's really, gold's going to come back down and the ratio would correct. But if I feel like, hey, gold's not cheap, this, whatever's driving gold is permanent, sustainable, and probably part of a long-term trend, then silver's cheap. Obviously, here we sit in 2020 when that gold silver ratio hit 125. I made the determination that gold was not cheap or not overvalued, but the silver was cheap. And so that meant, back up the shopping cart and take advantage. And so I think people that are paying attention did that. So if you're going to be in the silver game, understanding that ratio and the role between the monetary and the industrial side of it can help a little bit. Any final comments on this topic before we move on to the next one, Dana?
Well, gold is leading, and gold in dollars is about 5 to 7% under its all-time high in dollars, where it's 10 to 15 to 20% over already its all-time high in almost every other currency in the world. Rupees, euros, British pounds, Japanese yen. So gold is lagging in dollars as far as appreciation. To me, that tells me gold is not too expensive. In fact, in dollars, it's too cheap. And then with the gold to silver ratio on top of that, silver's much cheaper relative to gold than it should be at this point in the cycle. So silver is a great buy. So if you look at it in the world picture, gold is still undervalued in dollars relative to the rest of the world, and silver is considerably undervalued relative to gold right now.
Yeah, and I think really that's the story, and I think anybody paying attention knows that, but they don't understand why. A lot of times these talking heads, these smart guys, these industry insiders, they get out there and they spew a bunch of jargon and they jump to the bottom line conclusion. And some people will just go, okay, I trust that person and I'm going to do what they say, even though I don't understand. Or I hear what they're saying and they seem credible, but since I don't understand, I'm not going to make a move. I tend to be more like the latter, which is why I study, because I do want to understand what people are saying and why. And part of the motivation for doing this series with you, Dana, is to try to share the things I've learned over the last 12 years that I think are super important for people to know right now. Because again, we talked about this in an earlier segment. So if you haven't seen that segment, go back and see it. But where we're at in history right now is we are in the 49th year, and that's a really interesting number for those of you that pay attention to things like that. We're in the 49th year of the first time in history that every single country globally is operating on a 100% fiat currency, meaning that their paper money is not backed by anything physical like silver or gold. It's just they can print as much as they want. And at the end of this experiment, interest rates have been bouncing at the zero bound for the last decade, can't get off the mat. And there's too much debt in the world to raise those interest rates. So the only way to solve the problem is to print more currency. Every time they add more currency to the supply, it dilutes the value of the supply that already exists. So every time the Fed prints another $1 trillion, it dilutes the value of the dollars, you and I have sitting in the bank or in our wallet. And so to protect ourselves against that, and for smart investors, they move portions of their liquidity, their dollar holdings, into precious metals to preserve that. And we talked about that before, but that's what's going on. And what's really, really interesting to me with respect to gold is that even right now, as the dollar is relatively strong compared to other currencies, because it's caught a safety bid too. People in other currencies are like, oh my gosh, my currency's falling apart. I've got to seek safety. I'm going to buy US dollars because US dollars are the best currency there is. And that's true. Problem is the US dollar is going to be in trouble too, and gold is reflecting that right now. And so people who can see past that first phase are saying, okay, dollars are okay right now, but precious metals are reflecting the fact that even the dollar could end up being in trouble, and we need to hedge against that. So closing thoughts on that side of it, Dana, and then we'll wrap this segment.
Yeah, gold is kind of acting like the canary in the coal mine right now on this whole fiat money situation. That's why it's running higher and running a bit hot, but it still potentially has a long way to go. And the amount of money—
Which means the dollar has a long way to fall.
That's right. That's what I was leading up to. The amount of money that the Fed has created, 3 or 4 trillion in the last 3 or 4 months, is unprecedented. And it hasn't had a chance to really ripple through the whole financial system yet. And when it does, that should really propel gold much higher and silver much, much higher.
Yep. Well, that's why we're doing this. And we think it's important for all investors, but especially real estate investors, which are near and dear to my heart, to understand this. Because, there's going to be some real disruptions, and the world that we've operated in has changed and is changing and is about to change, probably, possibly, I don't know, in a very big way. And so when you're going to go through those stormy waters, and I'm going to mix metaphors right now, but you want to have some stability built into your portfolio. And real estate is fairly stable because people need to keep a roof over their head and pay their rent. And for the most part, it's pretty stable. And the powers that be tend to favor it. Politicians, bankers, and voters are all very much behind, especially residential real estate. But with that said, it's also very, very dependent upon healthy credit markets because it's very debt driven. And when those credit markets just get disrupted, as we discovered in 2008, equity in markets that have been depending on that kind of air in the jump house, that equity goes away. And that's why I'm a big fan right now of preserving your equity by converting it from real estate equity into precious metals. So we'll teach you how to do that in a future segment. But for now, we just wanted to share with you a little bit about the split personality that silver has with gold, as a monetary metal and also an industrial metal, and then a little bit about the gold-silver ratio. So we'll be back with the next segment here shortly. Thanks. Stick with us. Hey, thanks for watching our silver investing series videos. We hope you're getting a lot out of them. Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends, help them get on board this bus, help them protect and preserve their wealth to take advantage of what's going on in the world today. All right, thanks so much, and we'll see you in the next video.